So, you thought crypto was anonymous? And the ATO wouldn't notice your gains or losses? Think again. In 2025, the Australian Taxation Office is watching crypto more closely than ever. Whether you're trading, staking, swapping, or even just holding your digital assets, it's critical to understand how tax laws apply to you. In this video, I'll walk you through how crypto is taxed in Australia, what the ATO actually tracks behind the scenes, and how you can stay compliant while minimizing your tax bill. Let's jump in. Is crypto taxed in Australia? Short answer is yes, absolutely. In Australia, the ATO treats cryptocurrency as an asset, not a currency. That means most of your crypto activities are considered taxable events. These include selling crypto for Australian dollars or another fiat currency, swapping one crypto for another, using crypto to pay for goods or services, earning crypto through staking, airdrops, or yield farming. Each of these events may trigger either capital gains tax or income tax, depending on the context. Now let's talk about capital gains tax and crypto. When you dispose of crypto, like selling it or swapping it for another token, you may trigger a capital gain or a capital loss. Here's the basic formula. Sale price minus purchase price equals your capital gain. If you held the asset for 12 months or longer, you may qualify for the 50% capital gains tax discount, which can significantly reduce your tax bill. If you made a loss, don't worry. You can use it to offset other capital gains, either this year or carried forward into the future. When crypto is treated as income, not all crypto-related activity falls under capital gains tax. Some are considered income and are taxed at your marginal income tax rate. Here are some common examples. Staking rewards, airdrops, mining, especially if you do it commercially, earning crypto from freelance work or as payment for services. In all these cases, you need to report the income based on its fair market value in Australian dollars on the day you received it. What the ATO actually tracks. Here's where things get real. The ATO has extensive data matching programs with major crypto exchanges, both Australian and international. So if you've ever used platforms like Binance, Coinbase, CoinSpot, Independent Reserve, Kraken, there's a high chance the ATO already has your transaction records. They cross-reference this data with your tax return. So even if you didn't report your crypto activity, the ATO might already know. What if you only hold and never sell? Good news is, just holding crypto isn't a taxable event. But here's the catch. You still need to keep detailed records, including when you bought it, how much you paid in Australian dollars, what wallet or exchange you used. Keeping these records helps you later when you eventually sell and ensures you have a clear and accurate cost base. Common mistakes to avoid. Here are some of the most common and costly crypto tax mistakes Australians make. Assuming crypto is anonymous and won't be tracked. Forgetting to report staking rewards. Not calculating CGT when swapping one token for another. Losing records of wallet addresses or purchase costs. Mixing personal and trading wallets. Remember, the ATO can review your records going back up to 5 years, so it pays to stay organized now. Tools to help you stay compliant. Don't want to track all this manually? Use crypto tax software to make your life easier. Some popular options include Koinly, CoinTracker, CryptoTaxCalculator. These tools sync with your wallets and exchanges, calculate your capital gains and income, and generate tax reports that you can hand straight to your accountant. How to minimize tax on crypto. Here are a few practical ways to reduce your crypto tax liability. Hold assets for more than 12 months to qualify for the CGT discount. Harvest capital losses to offset gains, especially around end of financial year. Use separate wallets for long-term holding versus short-term trading. Declare staking and airdrop income early to avoid interest and penalties. And if you're ever unsure about your situation, speak with a registered tax agent. Here's a bonus tip. Their fee is usually tax deductible. Alright, that's it for today on crypto. If you found this video helpful, give it a thumbs up, subscribe for more Australian tax and finance tips, and leave a comment below if you've got questions. Thanks for watching, and I'll see you in the next video.